will start with our monthly recommendations. First, we have Hindustan Petrol. They are mainly into refining and also marketing and distribution of petrol. So, government can control the fuel prices through excise or VAT. And this year, the government increased the excise tax by around 2%. So, this is not to be borne by the end consumers, not by us, but it is to be borne by the marketing companies. Looking at the result, they had decent result. One key evaluation we do when we look at petroleum company is net refining margin. That is very good for them. Although there are few macroeconomic factors which can affect the crude prices, they will still at least give good dividends. One positive for most petroleum companies is the government announced a subsidy for LPG. So this is again positive. This will only improve the margins that I spoke about. And generally they give good dividends as well. So even if stock appreciation is less, through dividend you can earn stable returns overall. Next we have Canfin Homes. Current price is 880 and first target 990. It is a housing finance company. It is promoted by Canara Bank. They had again very good quarter result, particularly due to the interest rate cuts that happened this year. Their loan disbursements have increased. The net interest margin, which is a profitability measure we look for, has increased. The company's asset quality is also very good. Looking at the industry peers, they have one of the best asset qualities across the sectors. Although management is little flattish about the next half, our estimation is that the company will do well. And next we have Sundaram Finance. It is a non-banking finance company. See, they are mostly into commercial loans, commercial, agricultural, construction, small, medium enterprise loan as well. For NBFCs also, the result this time has been very good. One advantage for them is they are mostly into commercial loans, vehicle loans. So around 70% of their total loan portfolio is into vehicles. And as we are noticing, most of the two-wheeler, four-wheeler companies, Mahindra, all of these, they are giving very good results. So consequently, even for companies like this, it is boosting. Apart from that, looking at their last result, their net non-performing asset, which is the percentage of defaulted loans, has increased a little bit. This is not very concerning, but yes, that little lagging is there in the numbers. But apart from that, the company is strong, and particularly looking at how the automobile industry is going for the next half of the year, we are bullish on this company. Next, we have Vardhaman Special Steel. Current price is 296. First target is 335. They are a special steel company. They are the manufacturing and production of special steel. They have a technical collaboration with a huge player in Japan called Aiki Steel. Around till 2024, Aiki Steel had around 11% stake in the company. Now it has been increased to around 24% stake. And their results was okay. Revenue growth was not that great, but their EBITDA margins have improved. So that means that the company is able to price their products better. So special steels means they get extra margins compared to the normal steel. So industry-wise, we are seeing improvements in the numbers. And Aiki Steel and the company, they are also planning for a 2,500 crore greenfield expansion, which should start next year. And overall, for most metal stocks are doing well, and we expect the trend to continue second half as well. Finally, we have Kenna Metal. Kenna Metal is a cutting and engineering precision company. They have a strong parent in US, Kenna Metal USA. So they have a huge advantage of getting their expertise. They don't have to spend a lot on R&D because they get direct expertise from the parent. We don't have much company specific news as such. One of our main recommendation reason is that we expect manufacturing capex to improve by second half for private and for government. So riding that wave, this company is well positioned. Company is fundamentally strong balance sheet, very low debt. Looking at their last 2-3 years performance, it has not been that great. We can't call it a very high revenue company, but they're decent. So for those interested in such stocks, you can average them only when they're dipping. But otherwise, fundamentally, company stays very strong. It is a BSE only company, so that is one thing to note. Looking at last month's review, Nifty gave a return of 1.5. Our results have mainly been flat. It's mainly because of Kaplan and Sensor. Kaplan points pharma companies. Their results have come. The results is very good actually. It came only 3 days back, but most last 1 week Nifty has been giving poor returns. So mainly it's because of that. There's no concern. Sensor Tech, it is company results have been flat, but the reason why stock went down is mainly due to all the IT sector as such. So company specific, we don't see any risk, but as a sector, yes, uncertainty is there, and that is expected to continue until we get some clarification from US on what regarding H1B or tariff situation. Otherwise, Bharti Airtel did very well. They have hit their all-time high, and even Pricol as well. Yesterday, I think it hit all-time high. Okay, thank you.